Great. Welcome to Digital Asset News. They get top stories in crypto, bring down a bite-sized piece. So today, you're here probably because of the thumbnail and the title, which is Ray Dalio talking about how cash is trash. And there was a little snippet of an interview I want to play for you where he talks about cash is trash, talks about the collapsing markets, and why everyone's selling today and in the future. So that's the bad news. Then we're going to take a look at some good news. We're going to talk about 0.3% of households of wealth is into crypto. And knowing that, I think we've got a very long way to go. And then we're going to talk about why we're here extremely early and the upside that is in crypto and digital assets. In the very end, we'll go over Q&A. So just so you know, if you're here for the live stream, welcome. Thanks for stopping by on Tuesday. So we do Q&A at the very end. It goes kind of long sometimes, but what we do is we cut the Q&A and then we make that for a separate video. So if you're here for the Q&A, I'll answer all your questions at the very end. So let's just jump into it real quick and take a look at what is going on with the market today. So today is a correlation day, in all honesty. And yesterday, a couple of people notified me that I was looking at the 5-day for the S&P and the NASDAQ. So thank you guys so much for letting me know about that. But today, I mean, we're down yet again. So negative 3%, Ethereum 5%. Our market cap is 1.3 trillion, just barely holding on, and it's down 4%. Tether, nobody cares. Let's see what else. Everything's down except for Tron, 2.7%. Good job, Tron holders, making that mini bull run. Just kidding. And everything else is down for 24 hours. Anything up? Geez. I mean, there's something up in the last hour, 0. Stable coins. Yeah. 5, something like that. So no, just a bad day overall, just the red day. And that's just the natural swing of things. These markets, they go up, they go down, and sometimes there is an extension of what is going on. So that is happening right now. And let's just take a look real quick at just a little bit of macro of what is going on. So yes, because the S&P 500 down almost 2%, we are down 4%. And also NASDAQ is down almost 3.5, 3.26. And of course, we're down 4%. So, you know, I think it feels like we're kind of in lockstep unless something catastrophe happens or some major huge news comes out, like, you know, the Federal Reserve in America starts to embrace Bitcoin, or the IMF says Bitcoin's going to save everything. I don't see much of a reversal anytime soon, and we're going to be here for a while. Also, just know that we're in a macro environment. So it's not just like we're in a bubble. Everything affects us, especially with the traditional market and then, of course, our market. So there's some uneasiness going on, especially with this little news article I drummed up. I found that Chinese and Russian nuclear bombers are flying over the Sea of Japan as Joe Biden visits Tokyo. And I thought, well, that's a coincidence maybe. But of course, it states here, Moscow said the 13-hour flight was carried out strictly in accordance with the provisions of international law and not directed against third countries. Japan's defense minister condemned the exercise as provocative and unacceptable. Yeah, if I'm going to fly out 13 hours, there's going to be a pretty good reason for that. That's just a show of force, and that is what is happening. Also, that's not the greatest news. I think that's just a big flex situation. But also, this to me is actually good news. New home sales are down. And to me, I find that positive because if you've seen the reports, there is just not enough inventory and the prices were just going just astronomically high. So when we see these types of things, new home sales, I know this lady looks like, you know, she saw a ghost or something, but in all honesty, these home sale prices have to go down so people can actually get affordable houses and they can't be, you know, buying houses that are 200, 300% over market value. I mean, that's just an exaggeration, you know what I mean? So that's actually good news. So that's what we have in the macro environment. Let's take a look at my man, Ray Dalio. So Ray, one of the most important and probably most revered traders or investors of all time. And what he's here to talk about is how cash is trash. He talks about, you know, that you should get out of cash, and then talks about collapsing markets, and he talks about why everyone's selling. I thought it's a good backdrop to kind of understand exactly why things are the way they are. So I cut out the first minute where he just pretty much, you know, talks about cash and trash and whatnot, but he really gets into the details here in the next 3 minutes. So I'm going to share that with you. Let me share my tab. Let's see here. Brave tab, cash is trash, so you can actually hear it. And let me mute myself, and let's just take a
when there's a lot of debt, one man's debts are another man's financial assets. And they have to balance both of those things. And so they will not be able to raise interest rates to a high enough level to adequately provide a real return to investors. So if you think about the rise in rates, and we say 3% is an interest rate,
right,
or even 4% in an interest rate, that is not going to be an amount of money that's adequate to compensate for the inflation rate. And we're in a paradigm shift, I think. A paradigm is, something happens for 10 years, an environment for 10 years. And at the end of that 10 years, people believe everything that happened in the prior 10 years, and then they get a surprise.
Right.
And then they start to change. And something like, for example, cash is a safe investment, or bonds are a safe investment after a 40-year bull market and those types of things. That begins to shift as they start to think, am I getting a real return? So there's going to be a supply-demand balance. Most importantly, the Federal Reserve is going to sell, individuals are selling, foreigners are selling, and the US government is selling because it has to fund its deficit. So there's going to be a supply-demand problem. That means that it produces a squeeze because so much money was put out at such cheap rates,
right,
and so much financing was taken that it'll be difficult to achieve that balance.
So I remember when you would tell us that cash is trash.
Yeah.
Is cash still trash?
Of course, cash is still trash. Cash, I'm asking you, you know how fast you're losing buying power in cash?
I feel that in terms of inflation every day. However, I'm also, for those who own equities out there, they're feeling it even worse.
Well, it depends what cash is. Equities are trashier. Okay. The question is, what's going to get you a real return, right? And so we've shifted it into an environment where assets that do well, almost like in the 70s, are in those types of things. Real assets, real return assets in its various ways are the best investments. I think the world is long. Here's a dynamic I think that's a problem. Everybody's long, equities and so on. And everybody wants everything to go up. And the Federal Reserve wants everything to go up. So what they do is they give you money and credit, lots of money and credit that helps hyping it. And when the more they hype it, the more it becomes somebody else's financial asset they're holding.
Yep.
And so the world is holding all these financial assets and so on. You can't have that. So you're going to have an environment, I think, of negative real returns. And so
that's the thing right there, where he talks about, and he said it about perfectly. He goes, cash is trash, but equities are trashier. And the problem with equities being trashier is that people they still believe that we're in 2011, 2012, 2013, and that this will just go on forever. But what they fail to realize, and especially people who are younger, who just got in, who are maybe in your late 20s, early 30s, you don't remember that the dot-com bubble, things can go to zero. Things get wiped out. 2008, 2009, people were losing their houses left and right. And people don't remember that because we've been in this magnificent bull run for so long. So when Ray talks about, look, cash is trash, debatable, but these equities are trashier, and they are overinflated because of the amount of money that's being printed and put it into it. And of course, the ETFs that are being bought by the Federal Reserve, which leads me to my point. The good news, 0.3% of households. And this was an article from Fortune, and they talk about the 1 trillion crypto collapses crippling digital coin bulls, but the rest of us will hardly notice. This is actually from Goldman Sachs, friends of crypto. Just kidding. So here's what it comes down to. Adding up America's crypto losses, Goldman's chief economist Jan Hatzius nailed it, and his team say that America's crypto hodlers have lost about 300 billion. Okay, that seems like a lot. In the great crypto collapse of the past 6 months. That may sound like a big number, but it makes up a tiny portion, which is 0.3% of American household wealth. In contrast, America is heavily invested in stocks, which represents about 33% of household wealth. So it's like I'm taking crazy pills, and I'm thinking to myself, why is it that everybody is so caught up in equities and stocks, and they think that that is the only way? When in all honesty, we're in a market cap in crypto of we're going to probably go to 1.2 something trillion today. And if we can take a look at the overinflated stocks that are out there, why do people get into that? If it's 33% of their wealth, is they just don't really get it? Or is it education? They think this is all just a big scam or something like that? I mean, there are some very smart people coming into crypto and Bitcoin. So when I see this, it just makes me think, why aren't people getting it? Why aren't people going, you know what? If it's overinflated like that, we know that cash is trash. Maybe we can get into something. And like Ray was talking about, maybe there's some other things that are a little bit safer, like in the 1970s. And like me and my wife, we love to get into real estate. You know that. I say it all the time in this channel. So like when I see stuff like this, new home sales are down 16%. That's not a bad option. But what's an even better option, in my personal opinion, not financial advice, I'm not a financial advisor, is once you get into a little exposure into crypto and digital assets. And I think once we start to get a little bit of regulation in there, then some of these big institutions will come in, then they will actually recommend it to their clients, go, look, we don't know what's going on with these equities, but this is an underappreciated class. Maybe we can do 1 to 3% and go from there. And as a reminder, I know I say this, I show this a lot, but it's a good reminder that, look, this little square is 100 billion. Here's coins and banknotes. Here's us right here. First of all, it's nothing. And then we've got the Fed's balance sheet. No, it's way higher. This was in 2021, I think. Billionaires, here's gold, 11 trillion. Why? Fortune 500, Alphabet, Amazon, Stock market is almost 100 trillion. Money supply is way higher now at 35 trillion, probably 50 trillion now, who knows. Global debt, you're looking at 253 trillion. Global real estate, again, 280 trillion. And then what's the big ones? Oh yeah, derivatives, almost a quadrillion. So when I see that these types of stories come out, I'm like, and then I hear Ray Dalio talk, I'm like, why don't people get it? Like, if they just want to save a little bit of wealth and maybe conserve it and then go in here for the long haul, this would be the better option. But that's just me, and I can't tell anybody what to do because I'm not a financial advisor. And then to finish up, these patterns imply that equity price fluctuations are the main driver of changes in household net worth, while cryptos are only a marginal contributor. Exactly. I think it should be a bigger one, but we don't have, unfortunately, the clarity that some of these big name money people are into. And also, I forgot to put this up, but JP Morgan just added I think another 100 or 200 different financial advisors to their roster because they're gearing up for some big thing. I wish I would have put it in here, but I know that if they're going to do anything in the planning, right, it would be right now. So maybe these financial advisors who they talk to their clients might say something like, hey, maybe get into fill in the blank. So anyhow, that's what we got for that little section. Let me know what you think in the comments. And let's talk about this, why we're early. So this comes down to a graph that Blockworks had shared, and it didn't make a lot of sense at first. And they said 12% of U.S. adults have used crypto in 2022. And of course, in the comments, people are like, use? What do you mean? Like they use a centralized exchange, like they use it for payments, like they use it for whatever. And of course, it's just Twitter, so you really can't get the whole story. So you got to go to the actual article, and which is this. Income impacts how consumers use crypto, the Fed reports say. Only 3% of U.S. adults, 3% of U.S. adults report using crypto for purchases or money transfers, and they're most often low-income earners. So this is what we got. Fed report shows that people who use crypto for transactions are twice as likely to be unbanked, which makes a lot of sense, especially if you're trying to move funds around, or, I mean, if you're unbanked, how are you going to do it, right? Or if you're trying to send money back to another country that you may be from. Higher income earners are more likely to use crypto as an investment tool. That is very true. So here's what we got. Digital asset holders think about tokens come down to their income level. 12% of adults in the U.S. reported holding digital assets, which I believe would come down to this, 12% of U.S. adults. So 12% are holding digital assets. 12%, that's nothing. 3% reported using crypto for purchases or money transfers, according to the Fed's Economic Well-Being of U.S. Households report. And in 2021, almost 60% of adults who use crypto for transactions had an annual income of 50K or less. And then, of course, 24% of transactional users report an annual income of 100K or less. And then to finish up, those who hold crypto purely for investment purposes are disproportionately high income, which makes a lot of sense because the high income earners are the ones that actually can afford those crazy gas fees from Ethereum. Just saying. In 2021, 46% of those using cryptos only for investments had an income of 100K or more, while 29% had an income under 50K. And then it's my personal opinion that the 29% who are under 50K, who are dollar cost averaging and maybe waiting a little bit longer, will probably be the ones that are having the 100K or more as time goes on. So that's just the first part of why we're early. And then you have to remember, first of all, I'm old. And I remember times before the internet. And I remember times using Dewey Decimal Systems and actually mailing a letter before emails, because who would use emails? I mean, why would we? That makes no sense. So the things that we do today are just commonplace. They're just commonplace. Like I remember there was an interview with Bill Gates and David Letterman in the early 90s. And Dave just made fun of Bill Gates because he goes, that makes no sense. Why would I use the internet when I have a radio or a TV to watch a baseball game? Why would I watch it over the internet? That makes no sense. He's like, well, you can record it. He goes, I got a recorder. I just use my VHS. So like that's laughable these days. And the same thing are these big companies that are just kind of emerging. And one of those, give Coinbase a hand, is that Coinbase today, well, not today, just reported, enters the Fortune 500 list of the biggest US companies. The first one. The first crypto company to join the list recorded revenue of over 7 billion, almost 8 billion in fiscal year 2021 and placed 437th. Now, I don't know if they're going to keep that because Q1 of 2022 was pretty brutal, but this is what it is. The NASDAQ listed crypto exchange posted revenue of over 8 billion. Having first listed on NASDAQ in April 2021, imagine that. In Q2 of 2021, they just got listed on NASDAQ, and they entered the Fortune 500 within a couple of quarters. It's pretty amazing. The Fortune 500 represents 2/3 of U.S. gross domestic product, GDP, with revenue totaling $16 trillion. I did not know that. So, hey, I know I've been pretty critical of Coinbase, but congratulations to them for making it into the top, 500. So great. And then also, I know we're early because the different services that were in the past, it seems ridiculous now to think to yourself, yeah, I'm just going to go to the store all the time and get everything that I need. I'll never shop online. That's why we have Amazon. Or I'm just going to go walk down the street and pick up a DVD of the latest movie that just came out, and then we'll pay some rent fees from Netflix. That seems ridiculous because now we have, now we have Netflix. Or if you're owning stock, you don't really have Netflix. You probably maybe have Disney Plus or something, Hulu. So it's just goofy. So like this is why I think I know we're early, because the products of buying equities or stocks and then going to another app and purchasing crypto, I think those days are numbered. We had talked about this last week. FTX seeks acquisition in brokerage space. Sources from the discussions told CNBC that the Bahamas-based firm has spoken with Webull, Apex Clearing, and Public in recent months. And just so you know, they already rolled out this option. I don't know why this article says like this, but we had covered this last week. They had already rolled it out to U.S. customers on a case-by-case basis, and they could actually purchase stocks on the FTX platform. So again, this is going to be like the normal thing as time goes on. People are like, well, I'm not going to open up Robinhood to get Tesla, and then I'm going to open up Coinbase to get Bitcoin or Cardano or Solana, whatever else. I'm just going to do it all in one place because why would I use two apps? It makes no sense. And then just to finish this article up, this was from the president of FTX. On any given day, a person might want to buy Bitcoin, or they might want to buy some Tesla. Exactly. They're not going to want to open two different accounts. The reported conversation with brokerage companies also follow FTX CEO Sam Bankman-Fried buying almost 8% stake in Robinhood. I think we've heard about that. But this is also interesting. FTX US last year bought digital currency futures and options exchange LedgerX in a move to bring crypto derivatives to its US user base. It bought a stake in stock exchange operator IEX in an effort to establish a simple and transparent market structure FTX also revealed February 1st it was set to acquire fintech firm Liquid Group in a bid to navigate Japan's crypto exchange laws. So if you're looking for any company that probably go public at some point, might be FTX, might be an idea to take a look at their token too, but that's not financial advice, just something to talk about. And that's it. So look, I know it was a little bit, hey, we hit 20 minutes, great.